Welcome to GrainTV. It's Friday, December 2nd. I'm Kevin McNew. On my right, a man who's no stranger at the buffet line, Cody Bills. Cody, it was a good week on Wall Street, but not so good in the grain pits. We saw the Dow Jones post impressive gains of 7%, the highest weekly change since 2008. But when we look at the grain numbers, we saw paltry gains. Corn up 5 cents, beans up 29, wheat up 35. What do you make of this week for the grains?
Well, let me tell you, I don't like it. Yeah, we're positive, but when you see a coordinated effort by central banks to this magnitude, and you see corn, the only grain with serious fundamental spine, only up 5 points, I'd say this is a serious problem. This is a warning to farmers. Farmers, beware. Goldman Sachs comes out. They love commodities, but they show no love for grains.
Show no love for grains? Well, what about you, Mr. Farmer? Should you be showing the love by selling into the market or holding tight? We'll come back and take a look.
Welcome back to GrainTV. In the last week, Kevin and I toured the Midwest, and we only saw 2 corn piles out there. It's looking a lot like farmers are holding on to that grain and not letting it go through the system. Kevin, what sort of effect do you think that's going to have on prices moving forward?
Hey, I think when farmers hold a lot of that crop after harvest, I think it bodes negatively for the futures market. Let me tell you why. When I look at the last 2 years, 2011, 2010, those were sort of extreme years in terms of farmer holdings after harvest. 2011, farmers held a relatively low amount of grain, only 62%. We saw a sharp rally from December to March of $1.50 in the futures. In 2010, we saw a high amount of that grain held in the hands of farmers, 68%, and we saw a 50-cent fall off. I think this year we're holding upwards of that 68% level, and I think it bodes negatively for the market as we move forward.
Why do you suggest that farmers are holding on to this grain? What makes them hold?
Well, I think it's 2 things. One, obviously we had $7.50, $7.75 corn prices back in the summer, so we got some of that hope factor in marketing that they're hoping that the market's going to recover. Secondly, we got a lot of cash in the hands of farmers, and so the guys we were talking to know that they don't have to do anything for cash reasons anytime soon. So I think they're just going to have a wait-and-see attitude. But I've got a wait-and-see attitude about exports. Are they going to pick up here in the coming months to make this market go higher?
You know, I'm not a big, unless we see serious price come out of this corn, I don't think we're going to see a ton of exports pick up. I mean, we do have a strong dollar. We did shed a little bit earlier this week. But the bottom line here is we have incredibly strong basis. We got strong futures price, and that hurts our competitiveness on the market. Look at the Gulf basis. We're up trading at 68 around here, and in the last 4 years we've been down in the 40s, 50s. I mean, this is adding. This is really hurting, I think, our competitiveness on the global market.
Right. We know futures are high. We know basis is high, and we know our export business is pretty pathetic. So something seems like it's got to give, wouldn't you say, Cody?
Yeah, absolutely. I think the catalyst here, you got to go back to market fundamentals here, and I think that it's either going to be fear or it's going to be greed. I'd put my money on the fact that it probably will be fear, mostly because technically we're flirting with some serious key support levels. If we look at this, we're printing for March 2012 corn futures. We are printing here almost a head and shoulders. You'll notice that if we break that 586 level, we have completed that head and shoulders top, and I think that there's a good chance that we start moving lower. I think that that would potentially put us into a downtrend to a sideways trend, and either way, you're not going to be making money unless this sucker goes up, and I don't see the reason for it to do
right.
so.
And if we break 557, that lower support, it gets pretty UGLY ugly pretty quickly, wouldn't you say?
Oh, absolutely.
Hey,
absolutely.
upside here maybe?
Upside, I'd say that I wouldn't be holding the cash grain hoping for upside. I think you're going to end up betting the farm on it. Mm-hmm. And I would rather spend 10 cents and get a 660 call. That gives you some upside potential from about here up. So if we actually see the reason behind high, strong basis, the fact that farmers simply don't have the crop, we could rally incredibly huge. Well, if you buy that 660 call, you'll be able to participate in the upside over 660. that would be my play to the upside. But quite frankly, I'm more conservative right here.
So either way, sell it now or own it with a 10-cent 660 call. 10 cents, pretty good investment maybe right now.
Yeah.
Also a good buy at South Dakota's Wall Drug on your next road trip. Hey, thanks a lot for joining us on GrainTV. We'll see you next Tuesday.